You're listening to Alternative Investor Mastermind, where we do a deep dive on alternative investment opportunities and the lifestyle it can create. Join Jack Krupey as he presents actionable tips and tricks in doing passive real estate away from mainstream strategies. Go beyond the usual fix and flips and try less explored yet rewarding investing ventures. From multifamily properties, mobile homes, to cryptocurrencies. Do not miss this opportunity to escape traditional assets. And finally, create wealth without Wall Street. Now your host, Jack.
No discussions in the podcast are meant as an offer to sell or a solicitation for an offer to buy any security. All investments should be done after careful review and consideration of the investment documents and disclosures. Contents discussed in the podcast are not meant to be construed as an investment, tax, or legal advice. Individuals should always consult his or her own professional advisors before any investment decision.
Hey everybody, we've got a great episode today of the Alternative Investor Mastermind. I had a great conversation with Dave Wolcott from Pantheon Investments. We'd met at a conference a few years ago and stayed in touch, and he talked a lot about various alternatives, real estate, oil and gas, and we dove deep on tax advantages as well. And we talked a good amount about AI and the way that some AI tools can really help supplement your CPAs for tax planning, because many CPAs are really good scorekeepers, but aren't always as good with strategy. So it's a great episode. I hope you enjoy it. Check us out. Follow us on Instagram, YouTube, Facebook, and all major social media. Thanks, and enjoy the episode. Hey everybody, welcome back to another episode of the Alternative Investor Mastermind. Really excited today to have Dave Wolcott from Pantheon Investments on the show. Dave, how you doing?
Doing awesome, Jack. Yeah, really grateful to be here to connect with you and your audience. Absolutely.
So, we connected a few years ago at one of the real estate or alternative, mastermind type groups. So it's good to reconnect again. First things I usually like to start off with just having you kind of tell, give a little bit about your background and your story, and especially how you kind of found the alternative investment niche.
Yeah, you bet. It was quite an interesting journey, Jack. So I was raised near you, actually, in Connecticut, and kind of raised in a middle-class family where we didn't really talk about money. It was kind of taboo to talk about money. We didn't have a lot of money. But I was told that the recipe for success was go to school, get good grades, you're going to get a job, right? And life would just kind of work out. So I followed down that traditional path and then had an opportunity to serve my country in the Marine Corps. I did the ROTC program. Spent some time overseas and in the first Gulf War, and really learned some things in the Marines they don't teach you anywhere else, things such as leadership, teamwork, and integrity. And then shortly after that, I transitioned into the corporate world. And at the same time, my wife and I started raising a family. We had an 18-month-old. And then on October 24th, 2000, we literally had triplets and quadrupled the size of our family, right? So I can tell you, Jack, that the first thing going through my mind, I'm sitting there holding, I'm in my mid-20s, holding 3 babies in my arms, going how am I going to provide for financial security for my family? So I went to see my financial planner, and he just told me, the same thing he had been saying, which is just max out your 401k. You can invest in 529 plans for the kids. And I knew right then that building real wealth wasn't as a retail investor in the stock market. So this kind of launched me on this obsessive journey to really figure out how the ultra wealthy were really building wealth. I started investing in everything from retail to office to single family, multifamily, oil and gas, you name it, in different private investments. And fast forward, 20 years later, built up quite a nice portfolio, and then really wrote my book, The Holistic Wealth Strategy, and started Pantheon as a way to really help other people discover all of these advanced strategies of the ultra wealthy that's quite frankly very opaque, and how we can really change the paradigm and really help people live their best life.
That's great, and I've been a real proponent of. I just feel the majority of investors are have too high of a percentage of their wealth just stuck in the traditional financial system, which the last year or two has done pretty well, but we've also had multiple drawdowns, and frankly, even earlier this year, market was down 20% at one point in April on just the tariff headlines. So it is a roller coaster. But let's talk through some of the benefits. We're getting towards the end of the year, and I love to talk about taxes. So why don't we do a little dive into use it just sort of whether it's multifamily or any of the kind of real estate side of the syndication business. Let's just talk a little bit about the advantages on the real estate side for the taxes.
Yeah, Jack, I absolutely love taxes too, and let's even take a step back for maybe listeners who can't truly appreciate the magnitude of what tax efficient type investments can really do. And I struggled with this in my career, right? I became I moved on to the right hand side of Kiyosaki's quadrant, right? Became a business owner and an investor, but I went through firing 5 different CPA firms over the years until I finally realized that what 99% of the industry is actually tax preparers. And what you really need is a tax planner. So someone who can do strategic tax planning for you to really optimize your taxes. And to really put this into relativity for people, we're always trying to chase a return or a yield on a particular investment. Let's say we could get 15% IRR here, or maybe we could get 18 or 20% there. That's really great. But if you can save 10%, 20%, 30% on your taxes, and then do that perpetually and compound that, I mean, that is really massive in addition to, the investments that we're talking about. Right. So tax efficiency really should be on your total target, KPIs as to how can I reduce my taxes to, 10% or less, right? Even zero, right? Which is certainly possible. I know the real estate, fans really understand this, how this works from, passive losses and bonus depreciation. Yes, we're definitely excited that has, kind of come back to 100%. But we've really been doing alternatives for quite a while. And I've actually been, like I said, investing in oil and gas myself for the past 20 years. And this is one of the great tricks that you can do. If you have active income of any kind, or even capital gains, is that when you invest in energy, you can not only diversify from the market, right, and get into another asset class, but you're also able to offset your active income, not just passive income, but active income, in some cases up to 100% of your actual investment. So if you invest 100,000 into an opportunity, in year one, you could be seeing 80 to 90% of an offset, and they do that through what's called intangible drilling costs, similar to kind of depreciation in real estate, but where we're able to take that offset in the year. So I also think, the last thing I'll add, Jack, is that we believe part of our investment thesis is that energy is a phenomenal asset class to be in addition to real estate. So if you look at the demand in AI growth and where that's going, it's absolutely massive. And regardless of where you live in the world, what industry you're in, the demand for energy just continues to accelerate.
Yeah, that's a great point. I definitely share that thesis. Let's make sure, just for maybe some of the people who are newer to the show, let's do a little bit of a deeper dive on the active versus passive. Maybe just use a real world example. So, if you're a senior executive and you make $500,000 a year W-2, and you make 100,000 a year from a couple rental properties. Let's kind of talk through what a syndication can do versus what a energy or oil and gas deal can do for that individual.
Yeah, absolutely. So it's really as simple as on your K1 statement, if you're in real estate, you're generating passive income, which is also going to create an offset in terms of passive losses. So you can only match a passive loss to passive income. Now, the same holds true on the active side. If you're generating active income, and this is one of the nuances, if you've never invested in energy before, is that you would actually invest as a GP instead of an LP, typically like for the first year, and then you get switched back to an LP, but you come as a GP, and therefore you're shown on your K1 as an active investor, your income is active, and therefore you have corresponding active losses that can now be applied to whether you make your money from W-2, a business, or really it's just your total AGI. Even if there's capital gains in there, this offset can be all applied to that. Whereas in real estate, the passive losses can only be offset against the passive income. So this is an extremely useful tool to be able to manage your taxes and also actually have a great investment, right? This also creates, like I said, nice diversification play. It's a hedge against inflation. It's non-correlated to the market, right? And we see the need in the sector just growing.
Yeah, oil and gas, and I've tested a few deals myself as well. It had somewhat of a bad rep over the years, probably more from the 80s and 90s. But I've seen with the advances in technology, and I think it's really improved, and at least from my experience, been safer and more consistent as far as the risk of loss. Can you talk through that a little bit from your experience on sort of what types of deals, how you avoid the dry hole, if you will, and protect
100%, Jack. Yeah, you're right. And what's fascinating is people just think about the big oil companies and everything, but 80% of the production in the U.S. comes actually from small business operators in the oil and gas space, right? We, however, basically part of our due diligence and vetting process is that we are only working with sponsors that have actually third-party vetting, someone like a Mick Law or something where you get a legal opinion, and RIAs and family offices. We are investing alongside of them into these type of institutional quality type operators. There are plenty of smaller operators, and frankly, it's no different really than, let's say, a multifamily syndicator, right? Who may have done one or two projects. You may have that in the oil and gas space, someone who just, left working for ConocoPhillips. Now they, take their expertise and try to, start their own operations. But it's extremely capital intensive. And, if they go after just one well, you certainly have the risk from that, right, of not producing anything. But we also like to focus on what they call PDP, which is, actually production that's actually being developed, right now, and trying to access that production versus undeveloped production where you can go in and it's more speculative, right?
Great. I know the group that I had done some investing with, they also, I guess, track the big guys. Correct me if I'm wrong on this, but if you have like a big or like a Exxon or one of the top 10, once they own about 80% of the area, they're allowed to drill. And then the rest of the rights are sort of up for grabs. Have you looked into deals like that where you're kind of piggybacking on an institutional group and you're able to kind of jump in as sort of a GP, as part of their operational side of the business?
Yeah, completely. Right. And just like in real estate, right, there's so much creativity in oil and gas as well. So if you have one of the big guys who's drilling and you're able to acquire land, completely adjacent to that, the probability that you're going to, have a good result from that is going to be positive. Right. So you want to look for those. And then there's also kind of, one of the opportunities that we're working on right now that, again, will have up to 90% tax offset for year end is actually some aggregate production of existing, tier one players. Right. So we're kind of really tapping into that model. And then another thing that's done just really nicely is, one of the biggest risks in investing in oil and gas is actually price sensitivity, right? Because we can't really control that. But they set up really kind of this collar strategy where they're always kind of buying and hedging. So we can basically make money at multiple different price points.
Oh, that's amazing. Because I wasn't involved back in 2018, when was it? When did oil go negative? I guess that was during COVID.
Yeah, that was COVID 2020. Yeah.
I wasn't involved during that point, but during some of my diligence process, I talked to some investors who had been involved, and they still ended up doing okay in the long run because most of the groups just sort of tampered down production. They didn't stop it completely because you had to keep the well going, but they just pumped as little as possible, and within 6 months or a year, oil recovered, and then. By the time I was getting involved, I think I did my first investment, and then a week later, Putin invaded Ukraine, and oil prices jumped. So that was better to be lucky than good in that moment. Not that I want to consider that lucky that a war started, but it was an interesting time for sure.
Yeah, I think it's fascinating, Jack. I mean, really our thesis, we really spend a lot of time. We actually run a family office ourselves. So we spend a lot of time with family offices and, thought leaders in the space. And we're really looking to allocate capital, for decades, right, ahead. So we really want to look at, core fundamentals of a sector, of a sponsor, how things are actually performing, right? And so, when we look at the fundamentals, right, of the energy play, it's really quite compelling. Like I said, with the demand of AI coming up, and just we are so far from being green independent. I mean, we need all the resources we can to even make a dent in the needs and demand of the energy. So when you can allocate capital and know that in the next 10, 20 years, right, you're definitely going where the puck is going.
Yeah, it's a great point. Now, talking about AI and everything that's changing right now, how does that inform your thesis on real estate with potential job losses, job changes, everything going on?
I think the biggest opportunity for people is actually data centers. right? And so we've been talking to a number of sponsors around data centers. I actually lived in Ashburn, Virginia for a number of years. So we saw all this build out over the past decade, even before this big boom here with AI in terms of infrastructure availability. But the growth in data centers, I can't recall the exact numbers right now, but I just read something the other day that was staggering, the amount that, Meta, some of the top guys, Oracle, Larry Ellison, have actually purchased in data centers and computing right now. It's completely off the charts. So I think that's where the real estate opportunity is, right? With respect to AI, that's kind of where you want to be. And, talk about what a great tenant, right? I mean, I've actually I've actually walked facilities there, and you literally have physical security staff up front, and that's it, and then there's hundreds and hundreds of different racks and cooling and things like that are going on. But, almost like self-storage, right? How it's maintained by just, one or two people. You've got kind of low cost overhead, hungry demand of clients right behind it. So what a great tenant, what a great asset class.
Absolutely. And coincidentally, they're going into some rural areas too. I was talking to a friend from school, and he's actually on the housing side of the oil and gas, because they need, sort of tiny homes or kind of modular mobile, for all the workers coming in, both on the oil side, but in some cases they're actually housing the construction workers that are building some of the data centers that are trying to be adjacent enough to the oil for the cheap energy.
Yeah, for sure.
Yeah. So what's we're coming towards the end of 2025 here. What are some key things you're looking at over the next year or two, other than the data centers and the oil?
Yeah, so probably some two big sectors. So one that is really fascinating is this private credit market. Now, this has been a sweet spot for billionaires for at least the past 5 or 10 years. The sector has been growing by almost 20% combined annual growth over the past 15 years. And essentially, if you think about all of the regulations that banks have on small businesses for lending, it still continues to be a difficult lending environment, right? So by being able to provide access, private credit, it's kind of like hard money lending in real estate, but now you're doing lending right to small businesses that need capital to actually grow. So we've been working on a fund for the past 3 years that has just been doing exceptionally well. It's amazing because of the velocity of capital on this. So basically, as you allocate capital, the average length of a loan is only 7 months, and we're getting paid back principal and interest payments on a daily and weekly basis. As soon as that capital comes back into our purview, we can then reallocate it into the next opportunity. And then this is diversified across 15 different sectors across the country. So we're seeing very healthy returns there. From a cash flow standpoint, right? If you're looking for outsized kind of cash flow returns, that sector is doing really well and definitely deserves a look. And of course, you can get into private credit in many, many different ways. I even saw a deal recently that was around, the national defense sector, where it's, financing for national defense, type hardware for the military and such, right? So there's lots of little niches and different return profiles you can access there.
Great. Well, that's good to hear, especially that there's some more corporate and higher end stuff, because, granted, nothing against emerging cash advance as well, but that's one area as well that's kind of there's various, I guess, levels of it. Some people do it really well, but, it's an area, I guess, I've seen some people could get in trouble as well if they don't know kind of who they're working with, what they're doing.
Yeah, for sure. And then the other thing that we're really excited about, Jack, is we are launching just about 2 months now. One of the biggest challenges I've had as a professional investor and managing capital is, how do you measure and manage, right, all of these different alternative assets? Whether you've got real estate assets, you've got syndications, maybe you have some crypto, maybe you have even some angel investments. And sure, there's hundreds of tools that talk about, stocks, bonds, and mutual funds. But how can you aggregate all this data and now use AI to forecast, to say, hey, I want to have 300,000 in passive income coming in, next year, right? How am I going to get there? Or how can I help make better decisions around allocating capital, right? So is that next real estate deal with bonus depreciation better? Or should I go for something that's more of, say, tax efficient right now, right? How do I do that type of analysis? Well, we've developed a product called Pantheon Wealth OS. And essentially, it's an AI-based SaaS product that basically individual investors can use as a software product to really measure and manage their wealth.
That's amazing. I've spent a good amount of time myself just playing around with, ChatGPT, Claude, Google, and various tools. Even in things as simple as I get a lot of quarterly PDFs for all the syndications I'm in, and just summarizing and trying to pull them together. But frankly, my version of ChatGPT is somewhat disorganized, and it's if it's not really well prompted from the start, it's really tough to make it fully functional. So kudos to you for building that. Without going too far into the weeds, is that just sort of a custom version of ChatGPT that has a lot of the kind of training built in, or?
No, this is a full commercial scale. We're going to have RIAs will be able to access this, as well as family offices to use it for their clients, even some CPAs. There are also going to be some pretty cool, like, tax level analysis, like looking at tax liability, right, over the long term and forecasting, let's say, liquidity events. So how do I manage that? Tax preparation, how can I aggregate K1s, 1099s, all of this before I get it right to my CPA. So we're really excited.
That is amazing, and the whole world is being disrupted. I mean, I know there's a couple different firms in the legal side recently just got acquired. I mean, I think LexisNexis bought something. I think they renamed it Co-Counsel, but a couple lawyers had gotten in trouble for trying to write briefs using ChatGPT, and there was some hallucination or some improper cases that were cited. But somebody built one that had all the proper case law built in, and I think they were sold for $600 million to LexisNexis. And I know the former CFO of another company that was just sold to private equity, and that's two on the legal side. And I'm sure there's going to be a lot of disruption on the accounting side as well. It sounds like you guys are at the forefront of that, so that's amazing.
Yep.
Cool. And you have a book as well, Holistic Wealth Strategy. I know we've covered a lot already, but give me a little bit of a summary of sort of the book as well.
Yeah, for sure, Jack. Really, the holistic wealth strategy is just really, I think it's a blueprint, right? It's a framework for people how to think about building wealth outside of Wall Street. So leveraging real estate, alternative assets, all these things, and then really looking at this other concept that I really call holistic wealth, which is truly appreciating these other dimensions of capital. We all understand financial capital, but how about intellectual capital, spiritual capital, emotional capital, human capital, right? All of these things. Like, look at Steve Jobs, right? He had all the money in the world, but he couldn't buy himself another day. So how are you really investing, in yourself, in your health, right? How are you investing in your intellectual capital? There were so many times in my career where, I was excited about that next opportunity to invest in, but I didn't have financial capital. I didn't have the resources to do it. Well, after you start, learning, like great podcasts like this and reading books and things, you figure out, hey, maybe I can do a deal with, no money down, or other people's money, or you could be one relationship away from the biggest opportunity of your life, right? So there's all these other dimensions, right, that we can really focus on to really achieve, true wealth, right? And I think that's really what fulfillment's all about, right? When we die, no one's going to really care how much was in our bank account, how many deals we did, any of that type of stuff, but really focusing on really what matters, to you. So yeah, the book is really a framework to help people do that. And I also, Jack, wanted to throw out, for you and your audience, is a free copy to the book as well. It's at holisticwealthstrategy.com.
Oh, absolutely. That's great. We'll certainly put that in the show notes as well. And sounds like the book is dead on. I know I've lived some of that myself. I've told this before, my story plenty of times. But when I was in New York and making more money than I ever had, but I didn't have freedom, and I was sort of trapped, and I wasn't happy, and my health was starting to fail because of it. And it's really really important. It's not about necessarily sometimes the money. It's about freedom. But you need a certain amount of money to have that freedom to find happiness in some cases.
Yeah, 100%. Yeah, trying to figure out that balance, and we live in a really challenging times, right? Where social media is in your face. We're reacting to so many different things. We're raising families. We're building careers, right? All of these things. So it's hard to see the forest, through the trees. But when you can create, clarity through creating a vision for yourself on what you truly desire life to look like, then you can start living intentionally, and you can start focusing on these other things that really matter. And what's really fascinating is that some of these things don't even require capital, for instance. It might be more of a time management issue. You want to spend more time with your family, or maybe you want to spend more time focusing on your health. And maybe all that requires is, consistency, and maybe getting a coach, right, to work out, or maybe you hire a personal chef so you can eat better. But it's when we can get, clarity on our vision and, what's really important, and then start to, put that into action, right, and live intentionally.
Absolutely, absolutely. Let's change gears a little bit. Just outside of so you have at least 4 kids. I don't know if there's another one that didn't get covered in the story. And business. What else do you do for what outside of work? What else do you spend your time doing for hobbies?
Well, work is my hobby. And that's the fun thing, Jack, is that, I've created so much purpose in my life. So I don't really consider, my work. And that's the freedom to me, right? I have freedom of purpose to be fascinated and motivated about the work that I do. But really outside of, kind of trying to create impact, I do a lot of cycling. So have a big cycling community, probably do about 150 miles a week, and pretty active with exercise and doing that, and traveling past that as well. And yeah, I've got 4 kids and now actually one grandson as well. So
congratulations.
Expanding family. Yeah.
That's amazing. Yeah. I've officially old because I've gotten into pickleball.
Yeah.
Although it's not, I think that stigma is going away now. I think it's apparently the fastest growing sport in America.
Yeah, but it's not easy on the joints though.
Yeah. But it's been good for me cardio wise. I've lost about 60 pounds since a year and a half ago. So it's a good part of my routine. Cool. We've covered a lot already on this episode. Do you have any other closing thoughts, and as well as just remind people how to get a hold of you?
Yeah, no, really appreciate that, Jack. I think we covered a bunch of things, but I think the real takeaway for the listeners out there, again, is really before you get into all the tactics of the investments and this deal's better than that deal and how do I do all this? Yes, that matters and everything, but really just get clear on what is your vision. Right? Where do you want to be with your family, yourself, your wealth, your health, and get really clear. I'm talking like a 10-page document. What does it feel like to have, what do you want your relationships to really feel like, to smell like, to look like, right? What is your health? Describe your health in the future, in your future self. And then you will become your future. Right? The process is all about really becoming that. And then as we create financial capital, that is only going to amplify the results that we have. And if you have negative habits and negative vision, it's only going to amplify that in a negative direction. So really focusing on that vision, and then understanding, most importantly, that you are your greatest asset. And so investing in yourself is a number one priority. Things like listening to great podcasts like this and learning. Things like spending time with your family or in mastermind communities, or things to improve yourself and level up.
Well said. And I completely agree. And as far as getting hold of you, Pantheon Investments, I assume you're on most major social medias, LinkedIn.
Yeah, we're on everything. But again, the book is holisticwealthstrategy.com. And then, people can connect from us there.
Great. That's amazing. Well, Dave, thank you so much for coming on the show and sharing some knowledge, and look forward to staying in touch with you.
Thanks, Jack. Appreciate you.
That's all for this episode of Alternative Investor Mastermind. Now that you know the many alternative opportunities out there, all up for the taking, you can finally become ultra connected and ultra wealthy. Get more valuable advice from the experts by subscribing to the show at AlternativeInvestorMastermind.com. Become a winner in the world of passive investing today in alternative investment strategies. Thank you for joining us. Until next time.